We're back with Jae Oh, Medicare expert, talking about his book, Maximize Your Medicare, How to Qualify for Benefits, Protect Your Health, and Minimize Your Costs. So good morning, Jay.
Good morning, Josh. Thank you for having me.
So the American Rescue Plan deadline is going into effect on August 15th. What can you tell us about it in regards to the health insurance subsidy and what people should know?
Well, you're absolutely right, Josh. For most persons in the nation, August 15th is the national deadline. The American Rescue Plan notably increased the tax credits, which can be used to enhance the subsidy, meaning that your net premium for health insurance can decline, and in some cases, very, very dramatically. So that federal deadline is the 15th, so we are right at the eve of that.
So what do I do to get this? If I didn't know about this prior to this show, am I eligible, or is it one of these things where if you make too much money, you can't get it?
So certainly this is a tax credit. So as a result, there are income limits, meaning that if you have a high income, then you will not qualify. That said, what has happened is...
What's the income threshold for it? Do you know?
It's something called, it's 400% of the federal poverty level is where the lower bound begins.
Okay.
So depending on your household size and number of members and your location, right, that will change because of the fact that health insurance, as a result of the cost of living in different locations, is obviously different. Health insurance, of course, being very, very linked to that.
And so what can people get from this subsidy? So let's walk us through. I
Sure.
get the average couple making, I don't know, what is it? They're making 100 grand, 50 grand, 400% of the poverty level. So is that 4.00 times whatever the poverty level is? What is the...
Yes, that's right. And so I think you're right, because 400% of the FPL doesn't mean very much to everyday people, of course. So if you are living in a particular state, and it's not going to matter what the state is, that you do need to use the government-supported website, the portal. For most persons, that's healthcare.gov. There are some states that run their in-state specific.
So I'm looking here, 26,500 is the poverty guideline according to HHS.gov. So a family of four, I may be off here, I'm just trying to get this, making 106 grand a year or less can get this? Is that true?
Yes, it is.
Wow. So then...
And then you can tell, like I said, and I'm not exaggerating the point, which is a married couple who is, for example, wanting to retire, thinking about retirement, 63, 64 years old, and depending on their location, if they live in a high-cost state, New York does qualify as a high-cost state, but you would imagine there are other places in the country with your national audience would also understand this. Florida, Arizona, Texas, literally the degree of the tax credit, and I'm not stretching it, can be $1,000 a month.
Wow.
Per person.
But they have to apply by tomorrow? Is that correct?
This has been known since the president had announced the American Rescue Plan. I have been on this soapbox. This has been my corner here, Josh, for 3 to 4 months. This is literally a free option, at least to find out if you qualify.
Yeah, it's funny. Most people don't. I mean, I'm on healthcare.gov, and it says the last chance get health coverage through August 15th. It doesn't seem to be advertising, though, the American Rescue thing. I mean, it's saying August 15th, but it's kind of like cryptic. Am I
There
wrong
have
now?
there have been some extra federal budget money which have been used for commercials on TV and the radio. Something like 2.5 million people in the United States have newly applied who were previously uninsured. In addition to that, even people who currently have the advanced premium tax credit can get enhanced tax credits simply by going through the process again to have it recalculated. So as a result, this literally is that financial situation where people shouldn't be giving away a free option because they cannot be possibly hurt. Either they do not qualify, in which case they're making their own private decisions, or they do qualify when they didn't know that they qualified.
Yeah. So what do people do? They go to healthcare.gov and they do what? I mean, I'm pretending I'm signing up now, and it's very complicated. Maybe
I would agree with that.
Maybe I'm thick.
No, of course you're not. And it is kind of challenging. So,
like, I went to sign up for my business, right? Yeah, because and then it says, okay, well, you can't get in to the federal. I got to go to the New Jersey one, you know. And then
that is correct. So as I stated just a few moments ago, you are correct, absolutely, Josh, that what will happen is certain states, they run their own state portal. You need to go through that because they're the gatekeeper, if you will. Anyone who wants to qualify for the advanced premium tax credit has to use their state-sponsored or the federal portal.
So, I mean, this is really great news, and you're the clearest elucidator of this that people talked about it, but not really.
Thank you.
With it as clear as you know, people. Oh, there's a premium. So basically, if you make 104 grand or something like that or less, you should go on healthcare.gov and see if you qualify for this. But like most of there are things with the government, I find them very obtuse. Like I'm like pretending I'm going on as like somebody I know, and it's like I can't even. I'm like stuck. But anyway.
And you can imagine that this is why I've called this my corner or my soapbox, because you're the financially fluent. So part of that messaging that I've been sending out, which is, and there is a free tool, meaning on gh2benefits.com, which is my firm, you can get an estimate quickly by just putting your zip code, your ages, the number of people in your household, your income. That said, there's a second layer. There always is, because the part that I've been talking, and the reason that a financial person is required, or is my thought. Of course, you and I are going to be biased on the topic, but the fact is that people just think it's a government handout. It's not. It is a tax credit which is being pulled forward and being used to reduce your health insurance premium, which means that your tax reporting has to be accurate, or your estimate needs to be accurate. Because if it is intentionally inaccurate, you are making a statement, a sworn statement to the federal government. And when you file for taxes, it will be reconciled. So as a result, you can understand the number of complicated ripple effects here when it comes to this topic. A topic which will not go away is this interaction amongst financial topics that people may have handled separately in the past. That, for me, is not going to be valid going forward.
Yeah, so if somebody wants to do this, you mentioned the GH2 website. Do they need to get health insurance by August 15th, or do they need to apply for the credit? I mean, I'm looking at, I don't see any way where you apply for the credit.
Sure.
It's just something you get back on your taxes.
Right. It's a good question. So what happens is you have to apply by August 15th. The start date will be September 1st for most people, meaning that if they didn't have a loss of job due to loss of employment, and I'll get to that in a moment, but you need to apply to see and get the authority, and you do need to cross the finish line and actually have submitted a health insurance application through those portals by August 15th. Note that certain states have already closed, and I don't have that list in front of me, but some of the states with individual portals, they do have the right, they have always had the right to have the deadlines specified as slightly differently than the federal government.
And basically so you have to get health insurance by tomorrow, basically. But do you apply for the credit, or is it just something your accountant takes off of your taxes?
Well, I always suggest that you try to get this credit today, because you can understand that for many persons, health insurance, the sticker price, the full price, the retail price can easily be 4 digits per month per person, depending on their age. So as a result, if you told them $1,000 off, that number is too large. That difference can be the decision maker of I can or cannot afford it. So as a result, getting that tax credit and using it immediately generally is the path that I suggest.
Yeah,
I can be wrong about that.
What is the mechanism? I guess what I'm saying is, what is the mechanism to apply for the credit?
Sure. So what happens is you actually report your estimated income. And then once you report the estimated income, you get a calculation of what that tax credit would be right there on the spot. So let's just say that it's $800 a month. So we said, Josh, given your household and your age, your credit is $800 a month.
No, but I guess what I mean is, where do you apply for that credit?
All of that is healthcare.gov or the state-specific portal.
Okay.
That gives you the estimate right there.
Yeah, because I'm on there. It doesn't tell you. It just says the first step to apply. It's very
right. I've cut us to the bottom line. You're absolutely right. It's unlikely that, for example, like during this interview, that you're going to be able to get to that spot. But because what ends up happening is you cannot just apply as John Doe, right? You're going to end up having to give your social security number and
yeah, you have to log in, create a healthcare.gov account, all
exactly.
that. Or
exactly.
Or a get covered. Okay, no, this is good. So, folks, get this now. You got like 2 days to do it. The American Rescue Plan. Thank you, Jae Oh. And basically, we'll be back with your questions on Medicare and everything else Medicare related. So call us now. Folks, if you have a question for us, call us now. 800-321-0710. And if you call us within the next 3 minutes to schedule and keep your no obligation review, I will give you Jay's new book. What's your new book titled? I know you wrote a brand new one.
Maximize Your Medicare.
Maximize Your Medicare. Great title. Maximize Your Medicare will be yours free if you schedule and keep your no obligation review. And you can go to his website, GH2, for that.
Benefits.
GH2benefits.com for that free worksheet. So give us a call, 888-988-JOSH, 888-988-JOSH for the Maximize Your Medicare book. And we'll be back with your questions at 800-321-0710. This is Josh Jelinski, the financial quarterback. Don't touch that dial. Okay, so we're back. This is Josh Jelinski with Jae Oh, who is a MBA, CFP, CLU, CHFC, CFP, and managing director for GH2 Benefits based in Ann Arbor. MBA from U Chicago, smart guy who wrote the book Maximize Your Medicare. So we talked about anything else with the American Rescue Plan that we need to know about before we move on to Medicare.
Well, I think that the ripple effects, especially for your audience here on this show here, Josh, have been largely unaddressed, which is that you can understand the ripple effect this would have on the entire trajectory of retirement planning. There are many people, I'm very certain in your audience, 67-year-old working person working at a job trying to retire, but is reluctant to do so because of the fact they want to keep their 63-year-old spouse, male or female, gender doesn't matter here. They want to keep that under the company insurance because they thought that they couldn't afford it at $1,200 a month. Now, all of a sudden, if I told that person it's now $200 a month, the entire metric has now changed, right? Now the 67-year-old who wanted to retire, but just delayed, not because they didn't have the retirement savings or a plan, but because of the fact that that one item is so large. And this subsidy under the current construct is going to continue through the end of next year. How it goes from that point and whether or not it is a permanent subsidy, that is part of our budgetary horse trading, which is
no, well, that's
going on
fantastic.
now.
No, yeah, I'm thinking of clients, people 63 and a half, who are maybe
Absolutely.
delaying retirement because of healthcare costs. This subsidy could help
That
them.
is not a single person, absolutely. And I'm sure you have them as we do as well.
Yeah, we have a
And
ton of
this
people
can
like
be-
that, where they want to get a job
Right.
at Starbucks so they could get free health insurance
Sure.
for a couple of years. But the only worry I have on that is if somebody's making, I don't know, 150 grand a year, let's say in 2019 or 2020, and then they're making less and they're retiring, let's say in August of 2021, does the income for last year count or the income this year?
Income for this year is what is used for the American Rescue for the Affordable Care Act. It is different for Medicare.
So if
So
you have
again-
a husband and wife, basically you have, I don't know, they probably have to, make like 50 grand or less or something for this?
If you're 50 grand or less and you're a married couple at that age division, depending on the state, because of the fact there are cost differences nationwide, that
Okay.
example in Arizona is zero. The premium is zero.
Wow. So yeah, this is huge.
It is, as I said, that kind of goes back to my mentioning of these silos, which is that these topics that people believed were independent, isolated topics, they just are not. So as a result, and I'm going to be extremely biased on this, which is it's been my view, it has always been my view, it just so happens that it is now coming around, which is that the persons that you deploy to help in your camp as a listener has to have an integrated thought process because of these ripple effects. As you already know, Josh, as you well know, to try to get in fungible terms $1,000 extra post-tax with your portfolio, that's tough stuff. You are very unlikely to get it, right? In other words, you would have to be taking, your portfolio size.
Inordinate amount of risk. Yeah, no, exactly.
Or how big your portfolio would have to be in size of scale, right? One of the two. But my point is that money is fungible. So as a result, I'm saying here today, if you thought about it in those terms, think about what extra areas of your financial life can or should have been adjusted just from this one fact.
And that's why it's important to think holistically. It's important to get your book, Maximize Your Medicare. That's another one. And in our final segment, we'll give some holistic tips on Medicare. When we return, we'll be back with Jae Oh, who's talking about Medicare, American Rescue Plan, and more. This is Josh Jelinski, the financial quarterback. Don't touch that dial. We're back. This is Josh Jelinski. So Jay, appreciate some of the tips around the American Rescue Plan. What tips do you have for Medicare? What are changes you can make now to Medicare coverage to save money or to enhance your retirement plan?
As always, preparation is key, because very similar to what we were talking about in the prior segment, IRMA is a term which can mean higher Part D and Part B premiums depending on your taxable income. So as people prepare to retire and they create their projections and what they're going to do with their portfolios, how they take distributions, they need to be aware that taking monies from qualified funds is a taxable event. Not just that their broker or advisor had, withheld the taxes, but that as a result changes their taxable income, which can affect their Part B and Part D premiums. So as a result, this is why some advanced planning can be required, because Medicare uses a look-back feature. So they'll look back to the last.
They'll look back to 2 years. Is that so? If the IRMA, so basically you're going to have to pay more in a Medicare tax called IRMA if you take too much from your IRA or 401k, and we've talked about that on the show before. It's like a ripple effect. You think you're pulling money out of your IRA, and oh, by the way, your Medicare premium doubles or triples in some cases because you didn't do proper planning. So what do we do?
Well, it's exactly at your point, right? Which is that the marginal return then becomes negative, right? From kind of doing it in that manner, and I've seen that in a large number of cases. First of all, you absolutely have to plan, meaning that, especially in the age of the pandemic, we've seen persons who have needed large amounts of capital for whatever particular reason, or they wanted to get access to that capital, and they could have their own motivations. They wanted to help their child who had unemployment as an adult. They wanted to say, okay, I want to move to the suburbs and I need to plunk down money for a house, and let's just take big chunks of money. We need to think through that. I definitely tell that to people. For active people, it will very much depend on the difference between Medicare Advantage and Medigap. This is always the number one question: which one is better? And that has become more difficult since we have spoken last, and it has been more difficult in the consumer's favor, meaning that the sellers are very smart, the pencils are very sharp. What does this also mean is that they have competed away every last detail, basically every last detail. That has been in the buyer's favor. Again, the buyer has an embarrassment of choices, an embarrassment of riches, so many choices, but worth it. Worth going through the exercise to get the best combination of benefits at price points. Absolutely.
So Jae Oh, Maximize Your Medicare. You can get his book wherever books are sold, or you can get it free. Call us at 888-988-JOSH. And just like a pebble is thrown into a pond, there is a ripple effect from the decisions you make. Talked about American Rescue Plan, talked about the Medicare Part B, D premium, talked about IRMA, the dreaded Aunt Irma. So thank you so much, Jay. MaximizeYourMedicare.com is where his book can be found. GH2 benefits. Great to have you on with us, Jay. And folks, call us right now at 888-988-JOSH.
The preceding program was sponsored by the Jelensky Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelensky or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jelensky.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jelensky and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation.
Advisory services offered through Wealth Quarterback LLC.